Okay, we're going to have some company presentations now. And to kick us off this morning, we have Andrew Corbett, the Managing Director of Kingston Resources.
Thanks, Leo, and thanks, Ian, for a great preso. And I'm going to be a little bit more bullish and uplifting and talk about gold and basically introduce Kingston to you. We are a new company, and 6 months ago we actually closed a material transaction for us where we took over a Canadian listed company and picked up the Misima Gold Project in PNG. And we call it awakening a sleeping giant, and I'll explain that as I go and why we think this is such a large and great project for Kingston and our shareholders. So where is Misima? It's an island in PNG. It's about 600 k's east of Port Moresby, and it has a population of about 15,000 people. And what we've got there today is a JORC resource of 2.8 million ounces, about 80 million tonnes at 1.1 grams per tonne. Now, Misima was a very profitable project for Placer Dome for 14 years and actually produced 4 million ounces of gold and 22 million ounces of silver on top of that. And Kingston will be at 70% ownership of that project in the next quarter. So the company that we took over had an earn-in on that, and we're basically completing that earn-in. We actually started drilling 2 weeks ago after basically closing the deal in November last year. So our strategy is very simple. We're going to need to add value as fast as we can for shareholders and obviously get that uplift that we're all looking for. We want to extend the resource base of the so that's adding to the 2.8 million ounces we have today and move to a scoping study by the end of the year. And in addition to that, there's a number of exploration targets I'm going to talk about, and we're hoping to bring those into early stage starter pits for the project. So a bit of history, and I will go through this quickly because I can see I'm not going to get a lot of time up here. So Misima produced a lot of gold, as I said, and has a long history of 130 years of gold production. Placer made all the money in the 90s, and they closed the project due to the gold price being under $300 an ounce. But interestingly, the project averaged 230,000 ounces a year at 92% recovery for 14 years. And in fact, the first 7 years were over 300,000 ounces per annum. So it was a giant project for Placer, and that's why we look at it today as a great opportunity for Kingston. The only other point I will make here is, importantly, we have Placer Dome's drilling data set and database. So that 2.8 million ounces we have today is based on historical drilling. We haven't actually added any drill holes into that resource yet, and that's our current focus, to extend that resource. A bit more about being just in PNG and what we have at Misima. And the important thing here is there are 6 large operating projects in PNG. The mining regulations is based on the Australian system, so it's very well tried and tested. And Misima, most importantly, has the right culture. We like being on an island in preference to any location in PNG, and there's a trained workforce. So Placer did a great job of training the locals, and we actually have some of those people working for us today. In fact, there's over 100 local Misima residents doing fly-in, fly-out to Oktedi, Lihir and Porgera at the moment. And most importantly, economics, and why this project was so successful. It was a low-cost open pit, low strip at 2.8 to 1, and excellent metallurgy, low-cost processing plant, basically driven by soft ore or low bond work index and coarse grind. So it was a very profitable milling process. Where we're at today, we've started drilling in the last 2 weeks. That's the drill rig on site. It was quite a large effort by the team to get that mobilised in April, and they've done very well to be underway in the 6 months that we've had the project. The plan is to do 10,000 metres of drilling this year, all diamond, and that's all focused on, like I said, resource extension and these new targets, which I'm going to talk about. In January, we actually made our first discovery outside of the current resource, and it's an asset called Ginamawa, which is right next to where the Placer Mill was, and I'll talk to you about that in a minute. So what does that look like? And this just goes to show this project and why we're quite excited about these new discoveries is the structures are very high grade. As you can see, we've got 14 metres at 12 grams gold and 35 silver in a trench. And what's interesting here, if I can get this to work, that there is where the old processing plant was. That there is the old haul road. So this structure is right next to the old mill, It looks like it extends 400 metres to the north. We've got 20 grams up here, and there's structural indications that it continues out here to the east. So we discovered that in January after basically starting work in December. So that's a pretty exciting start for us. This is where we're drilling initially. As you can see, we're going to extend the resource here. You can see this outline here is actually the 43101 that was done by the TSX company that we took over in November. That 43101 outline has 2.3 million ounces in it. And you can see our JORC boundary here, drilling constrained, and that has 2.8 million ounces in it. Our focus is these blue areas, which coincide with those two areas there, our initial focus. And then we're going to step out to the east. So this is the project, looking at it, sort of stepping back from the original pit, and you can see these are our target areas, and we've broken it into 4 areas basically 4 areas of interest, and within each of those 4 areas there are a number of discrete targets. So we talk about it as the Umuna structure, the Umuna fault. It is this 8 kilometre long structure through here, of which 3.5 k's was mined by Placer, and that's where the 4 million ounces was produced. And today, 2.6 million ounces sits in that area. The structure is open to the north, to the south, and at depth. And in addition to that, there's all these targets on the east. So this is why we're quite excited about these satellite projects or starter pits that we want to bring into production early. Misima North is untested. We have some data up here in the north, and there's an old underground working which is very high grade, and we've got some soils which indicate there's gold up there, but Placer did very little work. They didn't need to. They had 4 million ounces down in the south, so that was their focus. Then the east, we're going to talk, I'll show you about some soils or some geochem anomalies there, and then last area being Quartz Mountain, where we've got that new area called Ginamawa. That's where the satellite pits were that Placer mined. I'm going to have to speed up here. So this is an example of what the Umuna fault looks like at depth. This is actually our deepest intersection, and it's one of our best intersections. The average drill depth on the fault, on the Umuna fault or the structure, is 119 metres. So it's not been drilled at depth extensively, but you can see 40, 50 metre wide intersections all going 2 to 3 grams per tonne. So it's a big wide open ore body at depth. The structural geology work is indicating this structure is as deep as it is long, and we've already got 3.5 kilometres of strike, so it's indicating that there's a large depth extension to this project. The second section here is another structure completely discrete to the main fault. It was called Tonawak, and Placer discovered that actually as they were mining the original pit. So we're obviously looking for these sort of targets as well. This is in the north, Misima North, and this is the untested areas I've spoken about. What's interesting here is the red is 4 grams per tonne. This is a geochem soil anomaly heat map. And you can see these are the trenches. We've got 100 plus metre trenches, 1.5, 1.6 grams per tonne, all to be followed up in the north. The drilling here indicates there's obviously good hits in the oxides, 8 at 4, 10 at 2, 10 at 3 there, all at surface, all 1.4 and 2.3 kilometres north of the old pit. So that's why we're quite excited about the northern extension of this project. The east, this is why we talk about it's being open in the east. You can see what's really interesting here is these underground adits, which are 3 kilometres from the pit. They've never been drilled or followed up. They were mined pre-World War II. And you can see all those pink dots are basic 2 grams per tonne at surface in soil anomalies. You can see some of these great numbers down here, 40 metres at 2 grams actually sits down here, and this is where our current resource is trying to obviously chase these extensions of the pits. This is an example of what they're mining today, and some of these alluvial structures and artisanal structures on the east side of the project. This is a hill 50 to 60 metres tall, and there's people up here on the top of that mining that by hand. I took that photo last August. This is Quartz Mountain. This is the 4th area I mentioned earlier, and where our first discovery is. And what's fascinating here, this is a 2 kilometre target here with 200,000 ounces in this resource. Again, pink is 2 grams per tonne, and that sits 500 metres away from the old mill, old processing plant, and where it was located. This is a resource we have today. So Placer mined 90 million tonnes already. We sit here today with 80 million tonnes at 1.1 for the 2.8 million ounces. You can see here, Placer, if we followed the Placer trend of feeding everything above 0.7, we'd have 50 million tonnes at 1.4 grams today for 2.2 million ounces. So just in wrapping up and where we're at, we closed the deal or the transaction in November last year. We got approvals in place pretty damn quickly, basically by Christmas. Environmental approvals, that's just to start drilling, and that allowed us to mobilise the rig in April and be underway. So where we are, we're drilling here in phase 1. We will be at 70% by July, August this year, and our partner is Pan Pacific Copper, which is Nippon and Mitsui, at which point they will either contribute to the project or they'll be diluted out. Our current view is that they will contribute, so we will have a funding partner for 30% of the project. Obviously, long way to go, but scoping studies by the end of the calendar year 18 and feasibilities into calendar year 19. This is a shot of the operation back in 1992. And I'll leave it there because I'm out of time. Thank you.